Still looking at financial services, according to a recent Central Bank of Nigeria's monthly economic report, credit facilities borrowed by Nigerians from banks that rose about 3.82 trillion in January 2024. Accordingly, the total consumer credit that rose by 11.9% in January 2024 from 2.64 trillion naira in December 2023. Personal loans accounted for 79.2% of consumer credit, while retail loans accounted for 20.8%. Join us now to discuss the numbers and issues in the fintech space. We have Ifeoma Bidoye, she's a fintech consultant, joining me via Zoom. Great to have you on the show. Good afternoon.
Good afternoon, Ladi. Thank you for having me.
Fantastic. It's great to have you. So it seems like the harsh economy is pushing people to borrow more, at this time, looking at this data. But how are you seeing it?
You're right. I mean, there's been a lot going on in the past 1 year or so in the Nigerian economy. Inflation has gone up. A lot of things have happened. Now, let's unpack it. So we're saying that consumer loans have increased. They've increased to about 3.83 trillion naira. And the reason for this, we can summarize it to three main headings. I mean, there are many reasons for three main areas. Inflation has gone up. We have high unemployment, and wages still remain the same. Now, let's look at inflation. If we look at inflation, inflation has gone up to about 33%, more than 33%. And a core component of the inflation is because of food increments. Prices of food has increased a lot in the past 1 year. The headline portion is 33% of the inflation. And if we look at the food inflation, that's even over 40%. Now, when you have the prices of things going that high, it's only natural that people who are not able to afford what they used to use or what they used to afford once upon a time have to take loans. Another thing that has happened is because of the changes in the economy, there's been an increase in unemployment. Although statistics say it's about 5%, but in reality, it's more than that. And the reason why it's 5% is because of the method that has been used to calculate unemployment. We have adopted an approach that says individuals who don't have work in a week, who don't have some hours of work in a week, is what we classify as unemployment. In reality, if you have someone who is working just 1 hour in a week or a couple of hours in a week, it doesn't really mean they're employed, because what is the wage from that short time going to get them? It won't be enough. Again, the wage has not increased. The wage that we had, the minimum wage we had in 2019 of 30,000 naira is still what we have. And so when you combine all these factors, people have to survive, people have to meet their needs, people need a way to bridge what they have, what their income is able to provide them with, and what their needs are. And the way they're able to do that is to take loans. And that's why we've seen an increase in the loan portfolio.
Right. And that reminds me of a saying, he who goes in borrowing goes in soaring. So I hope this is not sorrow that's loading at this point. But looking at digital lenders, we know they're big, in this market. Their loans go out really quick, and we know their interest rates, are really high. So if Nigerians are borrowing a lot, at this time, that means the digital lenders, like the loan apps, that means they'll be making bank at this time. So talk to me about this. We've seen in the past when oil marketers were making money, when oil prices were really high and people were suffering, we saw that there was some kind of windfall tax, for these kind of companies that were making, a lot of revenue from the oil market. So looking at the digital lenders, do you think there should be some kind of windfall tax, for some of these loan apps at this time?
So don't forget that even as lending increases, right, the rate of default, unfortunately, will increase. And the reason is, if you look at the 5 C's of credit, when you're giving credit out, you consider character, capacity, collateral, and all that. If you look at the capacity component of credit, the capacity hasn't necessarily increased. So it means that we're also going to, unfortunately, see an increase in defaults. So for that reason, I wouldn't recommend that we increase taxes in that sector because people are really just taking loans because that's what they need. But we're going to see a high increase in default, and the fintechs, the banks who are offering these credit facilities will also be affected by that. So that's something that we need to look out for as well.
Right, because I know those loan apps, they charge huge, humongous interest rates for their loans. But we see Nigeria's debt stock is also rising, hit about 121 trillion in the first quarter of 2024. How are you seeing debt sustainability for Nigeria and its citizens, seeing that Nigerians are taking a lot of credit in the first quarter also?
So our debt has increased to 121 trillion naira. And interestingly, that's a large increase. Interestingly, our income hasn't increased to meet that gap. Now, a large component of that debt is external debt. External debt is about 42 trillion naira, right? And our foreign reserves right now is about 33 trillion naira, billion. Sorry, external debt is about $42 billion, whilst our foreign reserves is less than that, about 30 something $billion. So we're looking at a situation where even our foreign reserves are way less, about 70% of what we owe externally. And what I would advise in that situation is, given that our debt continues to increase, I think this is a time where, as a country, as an economy, we begin to look at ways of increasing income. So debt is already existent. We can't do much about it, right? But we can increase our income. There are many ways we can do that. We're looking at, we need to start thinking about diversifying. We're looking at things that we should be looking at things aside from our traditional income sources, which is, oil. Let's look at ways to expand our agri sector. We have arable land. We have things that can help the nation build the economy, build our income profile. So let's look at that. Also, if we're looking at mining as well, I mean, the other day, gold bar was presented to the president, meaning that there's a prospect there. So what I think the government should be doing at this time is looking at ways to improve and increase income. So debt is on one hand, but if we're able to increase income, the income to debt ratio that we have will be more sustainable and more efficient, and it'll be a healthier ratio for the country to look at.
All right, let's look at another burning issue now in our just financial tech space. We're seeing, when it comes to fintechs, we've seen that sectors, seen some setbacks, with the interbank settlement system, that's NIBS. They experienced a 3-day downtime, earlier this month. And it seems these downtimes, make this sector quite vulnerable, at this time. I'm talking about diversifying. We know NIBS is all they have at this point. That's for the payment infrastructure. Talk to me about what we should be doing now to reduce these downtimes that we see with NIBS.
You're right, Ladi. There's been one too many downtimes. We had the downtime earlier this year, and we had one earlier this month, and another one now. So what those downtimes do is reduce consumer confidence. Most bank customers are, not sure about using banking applications or, using transfer to make payments. It has reduced the confidence in the banking sector's transfer system. However, one of the things that the banks can do, or one of the ways that we can see a solution to that is, because right now what we have is NIBS is the primary switch between banks. And by that, I mean, NIBS is sort of the interface that allows one bank transfer funds to another bank. Now, we have NIBS as the primary interface. We have other switches. And maybe it's time for us to begin to look at using and adopting other switches as a primary or one of the primary switches. Right now, we have NIBS as the only primary one. And what we can do is have another one. So if you have another one, the likelihood that both of them are down at the same time will be reduced. And so if one is down, you ensure that you're still able to do transfers between one bank to another, regardless of if NIBS is down. But what that would entail is for the CBN, or to give a mandate saying this switch has now been recommended as, because InterSwitch there are a lot of other switches in the market, and InterSwitch has different players have switches. If you are to recommend one that every player can use and adopt as a secondary or also a second primary switch, you're able to avoid such downtimes that can just halt business at once. And what that will entail is CBN mandating it, because that will now then give the players a reason to move ahead to use them. That's another switch.
Right, definitely, because we need more switches at this point. I remember one time when there was that downtime, I spent about 2 hours in the supermarket, trying to make payments, and there was a queue just to try and make payments and get your goods out. Well, thank you so much. It was great having your perspective, Ifeoma Abidoye, fintech consultant. Thank you so much.
Thank you so much, Larry. Have a good day.
You too. All right, we'll take a break now. When we come back, we're going to head straight to the markets. That's in a moment. Do stay with us.